Welcome to another episode of the Mike Smith Investment Podcast. My name is Michael Smith, and today we're going to be talking about NU Bank and whether you guys should invest. A little bit of an overview on the company. They're founded in February 2016, and they had their initial public offering on December 2021. So about 3 years they've been in the market. They primarily operate out of Brazil, so a little bit different from the other companies I've looked at. Not an American company. They offer credit cards, savings accounts, debit cards, and they're licensed by MasterCards. All their cards are through MasterCard. They also offer brokerage-free investments and cryptocurrency investing, and they've also created their own crypto coin, which is NU Coin. Something different from a lot of the other banks and their competitors is they offer only online services. They have no physical branch locations, so that takes out real estate expenses as well as wage expenses related to those branch locations. Their ticker is NU. Their stock price is $11.67. Could be higher or lower after I film this video, and their market cap is $55.42 billion. They are currently actively trying to grow their current market to other non-domestic areas, and they've done such. They're currently in Mexico, Colombia, and they operate in Brazil. They have very high market position in these areas, and they're one of the biggest bank companies in South America. They have a very dominant sales channel over other banks in the region as well. And we've seen that they were able to penetrate this area, Mexico and Colombia, and grow their customer bases substantially. They are constantly creating new products that target customers in all types of financial demographics, whether it's low income, medium income, or high income, and they have something called an economic moat, commonly referred by Warren Buffett, where a company is protected. In their case, they offer only online services, and they have low fees and rates as compared to other competitors. The online services is something that no other bank in their region does, and they also offer a lot lower fees and rates as compared to other banks in their region. All right, now we're taking a look over into the revenue. Since 2021, they've been able to increase their revenue substantially quarter after quarter, and I expect them to continue to increase their revenue. They've done a very good job at penetrating these certain areas and creating a very dominant market position and attracting new customers. They had a little bit of a decline, but they're still starting to rise in their market cap. This really just kind of reflects in their current graph. When we look at free cash flow, which I will discuss later on, we have seen that they have been able to increase their cash flow from 2022 to their trailing 12 months. And have a substantial increase in cash flow since 2023. So that's definitely an attractive look on the company. So if we're looking at ratios, we can see that they got out of their inception point in 2023. Their net profit margin had a 25% increase in that year. Their debt ratio also declined from 2019. Their free cash flow came out of the negative, and the return on equity also came out of the negative. And I definitely expect these numbers to grow as their revenue continues to grow. They're a very fast-growing company in my eyes, and definitely expect these 2024 numbers to, if not stay the same, grow. Looking at the discounted cash flow as a valuation metric, you can see that their terminal value with a discount of 15% was $3 billion. Their intrinsic value was around $4 billion with a 30% margin of safety. Can value this company at around $2,600,000. When looking at the market cap of $55.42 billion, they are very undervalued. And looking at the free cash flow, which we just did, they had a huge increase in 2024. So I think that even makes this whole model even more attractive to us investors. And I expect them to increase their free cash flow. This isn't a definite model. It could vary. Their free cash flow could decline. It could increase more than expected. But this is just a good outline of where I personally value the company. So if we look at the financial sector, for compared to the S&P 500, it's hard to put this company in the financial sector. They are, but most of these financial services are out of America. So it's hard to kind of gauge it in that sense, but financial services have been able to definitely outpace the S&P 500 when looking at a 6-month basis, and in 2024 I think that'll even become more of a possibility, considering the new regulatory changes to the market. Some of the risks associated with the company: economic downturns. They do operate non-domestic, so anything in Mexico, Colombia, and Brazil, any economic fluctuations in these areas could affect the company in a negative way. Currency fluctuations. They do operate with different currencies, so this isn't that big of a risk, but it could be. They do participate in hedging, so they've kind of eliminated a little bit of that risk. Political uncertainties, government instability in Brazil, primarily with the new president. I'm not sure when the date was, but there is some instability happening in that area, which could negatively affect the business. Significant increase in debt from 2023 to 2022. Hopping back over here, so we can see from 2019 to their trailing 12 months, they've definitely had a very big increase in debt, which is to be expected. Most companies do start to accumulate this debt as they continue to grow, and they haven't been a company for that long as compared to other competitors. So I'm not too worried about this. This could definitely be a risk, like I just said, but whether it's a big risk, I don't believe so. I think once they start to really get a good position in their business, growed it to a certain extent, I think if this number continues to rise, it could be a risk. But for now, there's no worries, and this can just tell you that they may be investing and trying to expand their business even more so. So for the last risk, any regulatory changes, the Brazilian Congress is considering enacting new legislation that would limit interest rates for credit card facilities. But this is just up in the air currently. But really, they are a banking company, so any regulatory changes enacted could affect them in Mexico, Colombia, or Brazil. So overall, they have a very, very dominant market position in Mexico, Colombia, and Brazil, and I think they will continue to increase that number. A very large opportunity for future growth. As you can see by their revenue, they're a very fast growing company. As they do have all of their services online, it's more attractive to a younger consumer. So this could limit some of their growth, but I think it's a very strong business model, because as these people continue to grow up, the company will become even more attractive to consumers. They have an economic moat, like I stated. They resist institutional imperative. They're doing something very different than their competitors. They offer low fees, low rates, and they're only online. They're undervalued, as we looked at the discounted cash flow model, and they're increasingly growing their number of customers year after year. I think this company has a very high possibility of becoming very profitable for any investor. So that is it for today. Thank you guys for watching. I'm by no means a professional, and if you want professional advice, I'd seek someone educated, highly educated in the field. Sunday, I will release a recap on what happened this week in the stock market. Thank you guys for watching.